Hi everyone, my name is Bassem and welcome back to the channel. This video will be part one of a two-part dividend income, dividend investing series. I'm doing two parts because there's a boatload of information to cover. I'm trying to keep these videos to a reasonable length and to avoid information overload. I'm going to be keeping this first video super basic. I'll be going over the foundation of what a dividend is, why do companies pay dividends, how often can you get paid, what do the dates mean, is a higher yield better? Are they guaranteed? Can they go up? Can they go down? The next video will focus on the power of dividends, dividend growth, and dividends that I actually own and have grown from. Before we get started, please give the video a like and subscribe to the channel so I can keep pumping these videos out once or twice a week. What is a dividend? There are a few different types of dividends. There's a cash dividend, stock dividend, they have one-time dividend payments. But in this video, we'll be focusing on the most lucrative in my mind, which is the cash dividend. It is a payment you get from simply owning the shares. Since you own shares, you're an owner. And as an owner, a dividend means you're taking part in the profit of the business. Why do companies pay dividends? Normally at the beginning stages of a company or a new company, you don't want to give away all your cash as a dividend. You want to use it to reinvest in the company and grow the business. But every company hits a stage, I'm sure, where they're not growing at a 20% pace every year. So you kind of run out of places to put all your cash, to reinvest all your cash. And that's where dividends come in. It's simply rewarding the owners of the company. If you take a look at Microsoft, they started to pay dividends in 2003. Then Apple, I think it was around 2017 when they started to pay dividends. They simply couldn't reinvest their cash fast enough. But keep in mind, you shouldn't really buy the Apple stock for the yield. I bought it before they paid dividends. I bought it mainly for the capital appreciation. And then they started to pay a bonus, the dividend, which was a bonus, and I'll gladly take it. How often can I get paid? There are annual and semi-annual, which I don't like. There's also quarterly and monthly, which are the ones I focus on. I like monthly and quarterly because I feel like I'm a sucker for instant satisfaction. I really enjoy that dopamine hit every time I check my account and I see a few $100s in dividends from there. If you see a dividend yield of 4% and you find the stock pays quarterly dividends, does this mean you make 4% every 3 months? No, it does not. The yield is yearly. You'll simply get paid 4 times a year. So 4% yearly means 1% a quarter. What do the dates mean? These dates aren't that big of a deal. It only matters when you're buying or selling. I guess the worst case scenario is you miss out on one dividend payment. But I guess if you do this 100 times, if you sell 100 stocks in the wrong date, you miss 100 dividend payments. I guess it adds up. You should know what the ex-dividend, record date, and payment date mean. Ex-dividend means no new shareholder is owed a dividend. Let's use January 28th as our ex-dividend date for an example later on. Record date is when current shareholders are owed a dividend. Let's use January 29th for this example. Payment date, obviously, is the date at which any shareholder who was eligible to receive the dividend will receive their dividend. Let's use February 15th. If you buy a share on the ex-dividend date, you will not get a dividend payment. You will need to buy the day before. If you sell on the ex-dividend date, you will still get your dividend. If you buy on January 28th, no dividend. If you sell on January 28th, yes, dividend. If you sell your stock after the record date, but before the payment date, you are still eligible. You will still get your dividend payment. If you sell on February 1st, 2nd, 3rd, 4th, and so on, you will still get your dividend payment on February 15th. You do not need to hold the stock to the dividend payment date to get paid. It's only until the record date. So after learning all this, just to be safe, try to buy 1 or 2 days before the ex-dividend date in order to get paid and avoid all this annoyance. Does a higher dividend yield mean a better investment? No. It might mean more money in the short term because you're getting paid more right now, but it's probably not a good strategy in the long term. I personally try not to buy stocks over 7% dividend yield, mainly because anything higher than that appears to be unsustainable. Also because the payout ratio would be very high. This is the dividends over earnings ratio. If a stock I currently own drops and the effective yield ends up going up to 7.58%, I won't panic sell. Stocks always go up and down, so you have to give them a little leeway. However, if I do see a stock going up to 9%, 10%, 11% yield because the stock price has gone down, I probably would consider selling. You want to find stocks that are like a comfortable medium. You want to find companies that with a good enough yield that can continue to pay out and maybe continue to grow. 4-5% stocks are great. I tend to dabble in 6 and 7%. I don't mind a little bit of risk in my portfolio. If I buy a stock that pays dividends, does it mean it's guaranteed? Will I continually get this 4% dividend? The answer is no, they're not guaranteed. But a company missing their dividends, missing a dividend payment, must be in serious cash trouble. If you're looking at a company's financial statements and you see 1 quarter of losses, it's not a big issue, but sustained losses over a couple of quarters is obviously another issue where cash might become a problem and where they can't pay the dividends anymore. Keep in mind, if you own a dividend paying company and they miss a dividend payment, expect to see a huge and drastic drop in price the same day or the next day they announce that they can't pay their dividend. Can dividend payments go up? Yes. When a company is confident they can sustain this dividend going forward and the cash and resources are available, they will increase their dividend. Examples I can think of that continually raise their dividend are like Coca-Cola, Enbridge, TD Bank, RBC, and I could probably name 100 others. Next, can a company's dividends go down? The answer is yes. This one I experienced personally. I was being too passive with my investments and I didn't notice that a company was slowly going down. Their stock price was going down. Their yield went from 7% to 13%. And then shortly after that, they ended up cutting their dividend by 50%. They had a few quarters of hard times. They had poor cash flow. They cut their dividend in half and the stock price within a few days dropped, I think 17 or 18%. Just a note, I didn't sell the stock. They continue to pay dividends and currently I'm at a loss on the stock price. But since then, it's been a year and a half. I've held on to the stock. They've continued to pay me dividends. And now on this overall investment of this one company, I'm at a break-even point. If I keep holding, I'll continue to get paid dividends. I won't be selling at a loss. That's it for this video. I thought I was going to keep this one short, but there's just so much to cover. Please tune in to my next video where I'll be talking about DRIP, Dividend Reinvestment Plan, the power of growth dividends, and my personal experience with stocks. And I'll show you some stocks that I own and the increase in dividends from year to year that I've received. Lastly, please remember to like the video, subscribe to the channel, maybe leave a comment on any other topics you'd like me to cover.